Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1020A, and today's date is July 12th, 2016, and the title of the episode is, Who Has Been Manipulating Stocks and Pushing Them to All-Time Highs? Now, before I get started, I just want to make an announcement. Last night, I placed an interview on the X22 Report Spotlight YouTube channel. It's with Bo Polney, so if you go over to that channel, you can view it, or you can come over to the x22report.com site, scroll down a little bit, look over to the right-hand side, you'll see the video there, or you can go to newssentinel.com. Same thing, scroll down a little bit, look over to the right-hand side, you'll see the video there, and you can play it. Let's get into the economic collapse financial news. Now, today on the market, we see the market as being pushed up, and they're continually pushing the market as high as they possibly can get it to go. Now, we know most of the people are out of the market. A lot of the retail investors, according to Bank of America and many other sources, we're seeing billions and billions flowing out of the market right now. But the market continually moves upward. We see many companies now showing that their earnings are not where they're supposed to be. Actually, they're declining. We're seeing that many of the corporations are laying off thousands upon thousands of people. We see gold is being suppressed, just like we thought it was going to happen. And they're trying to keep the gold price down. But what we're going to see is the gold is going to make new highs. It's getting more and more difficult to control what is happening at this point. And we see Seagate, they're going to lay off 6,500 people. That's 14% of their workforce. Now, they originally planned to cut only 1,600 jobs, but they increased it. And we're seeing a lot more tech companies lay off people, and we knew this was going to happen during this summertime. If you go back a couple of reports, we talked about how the tech sector jobs were going to start to be cut, and we're starting to see this. And as we move forward, we're going to see more tech companies come out where they're going to be laying off a lot more people. And the reason for this is because the economy is not doing what the U.S. government, what the central bankers are trying to convince us that the economy is doing. It is not doing well. It's actually doing much, much worse. Now, what we're seeing in the labor market, and we've been talking about how the tax receipts, they don't match up to what the U.S. government is trying to tell us. We also see job openings. They declined, and they've declined a lot further than they expected. In May, the BLS reported that the number of total hires was only 5.036 million, the third month in a row of declines, and the lowest print since November 2014, as employers clamped down on new hiring. Now, the Beveridge curve, it is showing the same pattern as 2007-2008, where all of a sudden we see job hires versus 12-month cumulative change in payrolls was moving up, up, up. And then when we hit 2007, it came crashing down. Well, starting in 2009, we saw the same thing occur. Everything was moving up, 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 until we hit the beginning of 2015. Since that time, we've been in a downward trend, which tells us we're heading in the same exact direction. And we know what happened in 2008. Everything completely fell apart. Moving into 2009, it just got worse. But this time, the American person, they're out. They're out of jobs. They're out of shopping and retail. They're out of the stock market. They're out of housing. The only thing that's holding all of this up are the central bankers and their bubbles. So when this comes crashing down, it is going to be awful. It's going to be a hard crash. Now, when we look at wholesale inventories to sales, we see they're at recessionary highs. Inventories remain at 0.5% higher year on year, with sales down by 2.5%, leaving the inventory to sales ratio hovering around 1.35 times previous recession highs. So inventories continue to rise and sales drop. Not a good sign whatsoever. Now, we've seen this before. We saw it back in 2008. It reached a high of about 1.4. Where are we now? Well, we hit 1.37, and now we're on the downward trend. We're down to 1.35. And we saw this back in 2008. We hit 1.40. It came down to 1.38, bounced back up to 1.39, and then just plummeted. So we're going to see most likely a dead cat bounce, and then right after that, boom, crashing. So we're looking at all of these indicators, we're putting them together, and we're on the cusp of this whole economy just crashing down upon us. Now, the IMF, they've cut Italy's growth outlook, and they're saying they are in big, big trouble. Well, of course they are. The entire European system is in trouble. The entire private Western Central Bank system is in trouble. And they're saying that Italy's economy is going to grow by less than 1% this year. Most of the banks, they are having major problems. So, what are they going to do for the banks? Well, we know they're giving them a bailout at this point, and they're looking to still do bail-ins. And a resolution right now is needed under the current rules to bring in the bail-in for junior and senior creditors. For the majority of the 15 largest Italian banks, the 8% minimum requirement would currently imply bail-in of retail investors of subordinated debt for about 2/3 of the number of banks in the sample. Losses would also impose on some senior debt holders. A resolution case, presumably the bank's own funds, would have shrunk further, which would mean the bail-in of 8% of liabilities would push deeper into senior debt. And what we're seeing right now is that Italy, their banking system, eventually what they're going to have to do is bail in. And this is going to spread. This is going to spread to other European banks. These banks are insolvent. But remember, the central bankers are going to convince you that everything is okay. All they need is this little bailout. All they need is a little bail-in, and everything will be fine. But what we see happening right now is that the entire system is cracking. The illusion of everything is fine is falling apart. Their illusion of statistical numbers convincing us that everything is okay, they don't make sense anymore. And when we look at the stock market, everyone's most likely scratching their head saying, why is the stock market continually moving up? It doesn't make sense. We know that investors, they're pulling money out of equity funds. What are they, 18 consecutive weeks in a row? And they're taking their funds, putting into precious metal, land, or any other hard asset. And we can see they're definitely doing this. And when we look closely at what is happening here, we see something very interesting. Now, a lot of people are saying it's the Fed. Now, remember, what they do is they pass the baton around to different central banks. This way, they feel that people can't catch on what's really going on here. Matt King reports that there's a surge in net global central bank asset purchases, and they're at their highest level since 2013. So we look at it and we say, well, who's making these purchases? And who's driving the stock market up? When we look, we see it's the ECB and the Bank of Japan pushing this market to all-time new highs. So where are the people? Again, nowhere to be found. They're bailing. They're getting out of the market. They realize that there's no reason to be in it. They know it's coming down. Let's take our profits and let's get out now. Now, of course, the central bankers just can't let the market fall. That would be ridiculous. So they have to keep it pumped up because they're going to bring it down when they are ready. And when they bring it down, you need to be prepared. Because once the market falls, and it's not just going to come out of the blue, they're going to bring it down. And they're going to blame it, of course, on some other group or country or something else, like they've been blaming everything on the Brexit. You need to be prepared for what is about to happen, where the entire credit system, the entire country is going to freeze up. And when it does freeze up, deliveries, goods, they're going to be very hard to get. And we're getting very, very close to that point. So if you haven't even started preparing, I would start ramping up. I mean, it would be nice if you had 6 months of food, 6 months of water, a weapon, gold, cash on hand. If you haven't started at all, I would start today. I would go to Costco, I would go to the supermarket. You can use lifereliance.com. They'll deliver it right to your house. But whatever you're doing, you need to be ready and prepared for this. Because once this hits, it's going to be horrific. Look at Venezuela. And we can see that everything the government tells us is always the opposite of what happens. Remember Obamacare? They told us it was going to be affordable. It's going to be incredible. This is all you need. You have all the health insurance you need. Everyone's going to be fine. And what do we see happening here? The opposite happening. Premiums are skyrocketing. Only a third of Obamacare co-ops are still operational. There are more and more of these co-ops failing. And out of the 23 initially created by Obamacare, there's only 8 that exist right now. And they're in the process of failing. So this whole thing about Obamacare, it's a complete disaster. This is why Obama right now is pushing for the public option. Now, if Obamacare didn't work when he was out there telling us how great it's going to be, how everyone's going to have insurance, how premiums are never going to rise, why should we believe the government at this point that the public option is the way to go? And you know, it's not the way to go. Because the public option would mean a government-run health insurance plan. Look at everything the government runs. They don't know how to run anything. These are not businessmen. They haven't been out in the real world. They're politicians who live in a dream world where they're being funded by free money. This is not the people we should be listening to. Those people should be just handling what we, the people, want. Instead, they're dictating what they think we want and telling us it's going to work. And then paying off their corporate buddies, paying off their friends, giving funds to foreign entities, getting free money from the central banks, doing whatever they want, doing whatever corporations want in their best interest. They're not doing anything for the people. So at this point, this entire system is about to come crashing down. And everyone needs to be ready for what's about to happen. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.